Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the bulls are back on the D Street and how? It's a bright green screen all across the board. You talk about the Nifty, that's over 250 points higher in trade. Over a percent uptick for this one. The Nifty Bank is also up and about. We can actually see a strong move across the banking, financial spaces, PSUs, private sector banks, the Nifty Bank. There's a 0.5% uptick on this one. Sectorally, all the sectors are bright in the green, led by metals that are up 4% in trade. You have PSU banks that is 3% higher. Even the broader markets have recovered strongly. You can actually see small and mid caps both upwards of 2.5% each that we can see. Even the IT, consumer durables, pharma, FMCG, a lot of defensive names are also participating. PSUs are back in action as well. Over 3% of an uptick for the PSE index, and you can see stocks like BEL, BHEL, BPCL, Coal India, Concord, all of them gaining a lot of traction. On the Nifty, Adani Group stocks are coming back in full flavor. You can see Adani Ports as the top mover with 5% uptick. Adani Enterprises 5% higher. Tata Steel, M&M Power Grid as some of the top movers on the Nifty right now. But what has really fueled this kind of a momentum on the markets after 10 days of pain, and whether this will sustain, I think that's the big question. Let's welcome our guest to answer this for all of you. We have Mr. Sharad Awasthi joining in. He's the head of research at Smith's. Warm welcome to you, Sharadji, and good to have you with us as always. Well, you're joining in on a day which is much less painful for all our viewers and investors. So it'll be a job much easier for you to really answer to all those insights and questions that I'm going to be putting across to you. First up, is this rally sustainable?
Yeah, I think the misadventures from US, particularly, just tweeting things and etc., have created a bit of ruckus in the markets. More in our markets, I think post December, the way the small caps, mid caps corrected by around on an average 15 to 20% a month over the last 2 months, I think that has created a bit of pain that has unruffled a lot of people. But now I think as we are firmly looking at a lower interest rate trajectory, maybe the tariffs will not be as steep. They were not as steep for China in the first place. Even Mexico, Canada, we are talking about a rollback. Yeah, but uncertainty, yeah, certainly would be there. But I think with the type of underperformance we have seen over the last, 2, 3, 4 months, rather 5 to 6 months, I think now there is the valuation discomfort that was there with respect to India is not there. We still remain the fastest growing. On the domestic side, I think the way the NBFC lending, liquidity, etc. norms are being relaxed, I think that should result in the liquidity coming back into the system. The tax advantage should play out over the next quarter or so, Q1 basically. So I think all in all, whatever I'm looking at, lower interest rates, lower inflation. Inflation is something, there is a bit of doubt till the tariff war
Yeah.
continues. But I think even tariffs continuing, it should not be viewed directly as something very negative because usually
Okay.
trade finds a way around tariffs. So I think it will not be as steep as people are expecting it to be. But yeah, clarity might take 3 to 6 months. So till that time, maybe a bit of uncertainty. You might not see a runaway kind of markets. But globally, that is. But on the Indian context, I think there is a possibility where we are sitting that once the interest rate trajectory globally is confirmed to be lower, even the dollar is showing some weakness. So I think both these should culminate into a very good opportunity for buying in India and emerging markets. And I think if FIIs turn into buyers in the Indian market, that should substantially help us, and we should be in for a very smart rally.
Okay, so in this, momentum, where exactly would you advise investors to start putting in if they were holding on to cash amidst all the decline, when they're finally seeing signs of reversal come through? How would you advise them to really go about spending in fresh or allocating fresh funds, sir?
Well, keep it simple. If you are new into the system, if your risk appetite is very low, I think going for large caps. We have published a report with 6, 7 large cap stories that we think are
Okay.
very good bets at these levels. Something like an LIC, something like a Tata Motors,
Okay.
uh, PI Industries. We had Asian Paints on the list. We had a Samvardhan Motherson because of this tariff issue. It's come down substantially. Still remains the largest company in the auto
Hmm.
ancillary space. And I think going ahead, the new verticals they are adding that should help. So these are general ideas which have 50-60% upside from current levels, even with China recovering. Even today, we are hearing some positive developments in China. Tata Motors could do very well. So 6-7 ideas you could spread across. I think even for that matter, a tube investment could be a very good idea. The SOTP comes to somewhere around 3700, 3800. From current levels, again, it should be what 30-35% kind of appreciation. It's gone up a bit over the last 2-3 days. So I think these are all very good frontline companies. But even in the mid cap space, you look at companies where the valuations are comfortable, considering the growth that they would do over the next 1, 2, 3 years. I think there are a lot of opportunities you could look there also. So I think just spread it across. If large caps you want to go in, I think these are the names you could look at. But even in mid caps, I think there are plenty of opportunities.
Okay, yes, exactly my point. I wanted to come to this itself. While we are seeing, probably on the benchmark, there's been a decent amount of consolidation. We could be in for a smart rally as you expect. What about the mid and the small caps particularly? Of course, these two spaces have come down over 20%. They've entered bear market territory from the peak. Over 21% of loss for the mid caps, 24% of a decline for the small caps. Do you think all the excesses that that the street was worried about have now been taken out? Do you think it's a good time to start putting in fresh funds in the mid and small caps as well, sir?
Yeah, I think if you're a long-term investor and if you can, have the appetite for that kind of volatility, which they will have from time to time, like the one we are seeing right now, rarely do you have a 2, 3 year kind of horizon where these mid caps, small caps do not correct by this much. I think if you can stomach that volatility, you should invest into mid caps, small caps, because the alpha will be generated out of there. The large caps will generally, give you 15-16%. Maybe part of the portfolio does give you abnormal returns because you bought it at much lower valuations or at a time of distress. But generally, they will give you 15-16%. But the alpha will be generated out of the mid cap, small cap. So if you're a long term investor, you can stomach the volatility and not really get nervous about 30-35% kind of cut. Which is very difficult, like we are seeing right now. Means for us, it was not very big in terms of the correction, but I think the new genre that has come into the market, they are very nervous about this, and there has been a lot of hype and hoopla about this 20-30% corrections. But these are normal parlance in the small cap, mid cap space. Occasionally, stocks do, the broader indices do not do. But a 30-35% correction in a small cap, mid cap stock, I think more so in the small cap space is very normal, given that the liquidity side is low, institutional participation is low. So here's a kind of movement, and once a certain type of movement starts, everyone starts to follow it. So if you can stomach that volatility, I think certainly mid caps, small caps. When we look across the board, small caps I don't look so much in detail, but mid caps, whatever we are looking at, I think across the board we think that most of the valuations are very attractive. Many might not look very attractive if you look at the trailing 12 months. But if you look at 1 year, 2 year, I think most of the valuations are more or less in sync with what they should be, and should offer very decent upside from current levels.
Any pockets, sir, that still you believe there is more correction that needs to be had before these pockets start to recover, so that our viewers stay cautious, even in case they are looking at some pockets to invest in? Where do you find still discomfort, either on valuations or on performance, cyclicality, any key reason? But which are those pockets that you would still put in the avoid basket?
I think the capital goods story across the board is still a bit on the expensive side.
Okay.
So that might not give you too much comfort in terms of valuation. Not to say that it will not go up. Similarly, some of the stock broking stock, particularly the advisory kind of stocks, I think there a bit of
Okay.
valuation discomfort still exists. So to pinpoint, I think these would be the two pockets. Maybe some of the ER&D companies also, the valuations might be a bit stretched. But if you discount them 1 year forward, I think that is the valuations come down normally. So I think if I have to put in two sectors, I think some stock broking or market related stories, some of the AMC stocks, maybe they are valued optimally at this point, and some of the stockbroking companies and the capital goods, particularly the likes of Siemens, ABP, Cummins,
Yeah.
I think they still trade a bit on the expensive side.
Okay, fair point. When I'm talking about the avoid list, I just wanted to get a sense from you. You were talking about Trump tariffs in your initial part of the comments. Uh, do you think there are some sectors which are more vulnerable to any kind of statements that could be coming in for a periodic time, from here on as well? Do you think the likes of IT, pharma, or even auto, are they more vulnerable than the others, maybe for sharp knee-jerk reactions as and when some tariff talks erupt?
No, I think for these products, it would not be that much of a problem because, both countries are intertwined. They are intertwined with most other countries also. And
Yeah.
it would not be so easy, to shift the supply chains overnight. It has to be a gradual process.
Hmm.
Announcement wise, yeah, knee-jerk reactions might come in. But if you look at the auto stocks across the board, I think most of them have corrected a bit from the highs, not leaving much scope. Maybe an iShare, etc., corrects much. But look at the likes of Bharat Forge, etc. They've already corrected substantially from the recent highs. So I don't think there is scope for these stocks to correct further. Metals, etc. Also, I don't think there is scope of too much correction there.
Hmm.
Uh, because the larger players, there are very few who are just domestic. I think Tata is more or less a multinational kind of
Yeah.
situation. So how the Europe relation plays out will also need to be seen. With the local players, I think yeah, steel would be now fairly squarely valued. I don't think there's much upside. Aluminium might be something that could benefit. Hindalco might benefit out of tariffs favoring Novelis particularly. So I think that is one company that could benefit. But other than that, I think most of them should remain status quo kind of performance, market linked performance for most metals. And particularly on tariffs, I don't think even autos will have so much of a problem. But if one place which I could look at, I think breweries could be something, the frontline branded ones that could have some hit because of some tariff renege there. But other than that, I think because we are on the brewery side, we are largely focusing on what premiumization. And on the premium side, if international products are allowed, I think there could be some competition for them, which is they might have to fight hard to hold fort. So that is one place where the valuations are also always a bit stretched, obviously. But that is one space I think that could get hit because of the tariff issues. But other than that, across the board, I don't think there is any direct. Occasionally, because of the announcement, yeah, 1 or 2 day kind of problems you might see in some sectors. But across the board, on a sustained basis, I don't think tariffs are going to create much of a problem for industries, largely.
Absolutely. Now, Mr. Avasthi, I think one question remains as to how are we looking at the FII positions from here? They have been consistent sellers, 9 straight days is what we've already seen. But of course, from the last 5 months of a fall, $25 billion have been pulled out as well. Now that we are seeing signs of positivity return on the markets, do you see FIIs also coming back to India anytime?
Yeah, difficult call to make. The way they have been selling, they seem like on in a hurry to get out. But I think part of the Chinese valuation comfort that was there around 6 months earlier, our valuations were much higher and Chinese valuations were much lower. So, as a global trade, it was a very beneficial position. But now, I think over the last 6 months, we have normalized. Our valuations have come down and the evaluations have gone up a tad, and growth as such still remains very negligible in China. I think the problems remain in the economy. Occasionally, bumping it up with incentives and fiscal stimulus, etc., will drive it up somewhat. But I don't think it's a sustained path. So that buy China, sell India, I
Yeah.
think that as a trade is more or less over as an opportunity. And from here on, was the interest rate trajectory is lower, I think emerging markets should get better flows. And I think the sell India story is more or less over. The valuation discomfort is not there. If you look at even forward valuations, I don't think the discount is anywhere near to what it was around 6, 7 months ago. So I think I think it's all should shape up very well. And if the quarterly numbers also start improving, most of the banks are guiding for the credit costs to improve. And with the NBFC credit cycle coming back, I think there is a possibility that advances start to grow. So I think credit side, credit costs might look much more favorable. NBFCs are BFSI is a very big space, so that starts contributing to the quarterly numbers also. So all in all, I think interest rate, good quarterly numbers, lower interest rates should result and sell India, buy China kind of trade more or less maturing out. There is a high probability that FII inflows should return to India.
Okay, high probability. So that's a positive there. Let's talk about some pockets then as to what's your insight on that. PSU stocks, sir, that's also coming back in strong momentum. Railways are recovering. We are seeing some momentum even on the defense spaces as well. PSU banks are coming back into action today again. It's a 3% uptick on this one. Within the PSUs, what gives you comfort to add in fresh money, sir?
See, on the large cap list that we had, we have included IOC and Coal India. I think
Okay.
both have decent dividend yields. Growth rates would be decent. IOC is also diversifying into a lot of stuff, so that should also help. Even Coal India is diversifying, and not that coal is something that is dying down day after tomorrow. It'll take some time, and I think by the time the coal business matures or it goes in a natural kind of downtrod, particularly in India, I think by that time the alternate businesses that Coal India is developing should help. And even within that time, in case these stocks do not perform, the dividend yields are robust enough, and I don't think there is any reason to be nervous at these valuations. IOC might have static to stable numbers, but we still think that you could have 40 to 50% upside from current levels. These valuations are attractive valuations for them. Coal India also, I think the upsides could be 25 to 30% from current levels. And the dividend yields are robust. And beyond that, also the likes of PFC, REC, a power grid, something at around 1.5 times price to book. I think these might be good stories. Power Grid have long been in favor of buying this idea. I think the type of T&D expenditure that we are going to do over the next, 1 or 2 decades, Power Grid could be a very big beneficiary out of it. And now you also have valuation comfort at 2.5 times. It becomes a bit difficult to buy into Power Grid. But now the valuations are comfortable. I think even the PFC, REC, the renewable energy piece is good. Even the distribution discoms financial prudence, or the financial fiscal prudence of these companies the government is looking at, so that should help. The likes of PFC, REC, renewable energy should remain favorable. So I think, yeah, PSU banks now the valuations are not stretched. If you want to bet, I think SBI remains a good bet to have. Even a Bank of Baroda or an Indian bank, I think these are good ideas to look at.
Okay, good ideas to look at. So we have LIC, Tata Motors, PI Industries, Asian Paints, Samvardhan Motherson as some of the larger players, and IOC, Coal India, PFC, REC, Power Grid within the PSUs as names that have been suggested by Mr. Avasti. One more pocket is the Adani Group stocks. What are you making of the kind of bounce that we are seeing across the board on Adani Group stocks, sir? The news flow was limited to Adani Wilmar acquiring tops this morning, but the entire space is coming back with full glory. What would you really suggest investors who were big on the Adani story, have been waiting for the momentum to kickstart again? What should they do?
Uh, See, hard to comment whether that kind of momentum you will see again or not.
Yeah.
But I certainly think that last 3 4 years, I think I don't remember that I've seen these stocks trade at these valuations. Uh, Obviously, some of the stocks have very good ropeway going ahead. I think the type of growth these companies can achieve over the next 4 5 years could be very phenomenal. Now, I think the valuations also offered some comfort. My top bet would be Adani Port only. I think I'm very comfortable with those. And if you want to bet on, I think a bit of high risk, high growth kind of story, I think Adani Green and Adani Total might be very good ideas to look at if you extend your horizon to 3 to 4 years. But being the Adani Group, I think, and the way the volatility has been in this stocks, if the markets are favorable and a risk on is there, maybe you get some returns early also. But you can break this group into two kind of scenarios. One is the safer, diversified, large businesses, and the other, they might not be very large as on date, but the plans are very big and they might scale up into very different kind of animals over the next 3 4 years. So I think Adani Total, Adani Green fit on the bill, and if I have to play safe, I think Adani Ports remains my top bet.
Okay, fair point. So that's as far as the Adani stocks are concerned. I'll also get you to talk about the new age internet space, sir, and help us understand what's your stance now, especially with the likes of food delivery giants and quick commerce players like Zomato and Swiggy. They have been through, a consolidative period as well. There are slowly and gradually some, momentum back. How are you looking at these two pockets, and where do you still have higher conviction between the two?
Uh, I think I'd continue to go with Swiggy. The valuation comfort is obviously there compared to a Zomato. But I think it has also corrected substantially from the highs. Even the likes of Ola, etc., have corrected. So I think most of the new age stocks have substantially corrected. Uh, I'm personally betting big time on ASA. I think that is one idea that I'm looking at. I've been telling it, it's not done much, but yeah, I think that is one idea I am a bit more bullish on. But as a concept, I think even Swiggy, Zomato, Ola, these are all excellent concepts, but they will have their inherent risks, ups and downs. Occasionally, the decisional what can you call it, slumber kind of situation, or an irrational decision being taken
Yes.
resulting in some kind of business anomaly. I think that is something that will happen in these companies. But yeah, in terms of growth, I don't think you can doubt that these companies will grow leaps and bounds over the next 4 5 years.
Okay.
How it translates into bottom line and valuations is a different ballgame. But at these valuations, I think most probably you do not have too much froth in the valuations.
Okay. Okay, got that. FMCG is something that I wanted to also discuss with you. You remember this was the pocket that we have really largely discussed once the first February budget was announced, tax rebates were announced, and this was being seen as the space that will be the next big theme in the markets. So far, of course, it's lost a lot of momentum. We are yet to see the benefits of the budget kick in starting April 1st. How are you placed on the FMCG players, sir?
I think across the board to expect, that the tax break would result in, me eating more or brushing more. I think that would be very foolish. I don't think that is going to happen. The more spending would happen on consumer durables, taking a loan to buy a better vehicle, maybe whether it's a two-wheeler or a four-wheeler. So I think that is the leeway that would happen in that bracket, 5 to 7 to 12 lakhs kind of bracket. I think fooding habits, generally it's going out and eating. I think that would be something that will be more on the list. So I think, restaurants, travel, tourism, that would be more benefit. That would benefit more out of it. Maybe the consumer durable financing, consumer durables, they would benefit more out of it. Particularly the FMCG side, I think they will benefit more from some stability on the raw material prices. I think Ukraine-Russia tensions dying down should result
Yeah.
in fertilizer prices coming down. So the whole food chain should come down. Logistics costs should come down after the Red Sea resolution. So that should help. So I think the raw material side pressure coming down and rural and urban both picking up at the same time. That will be a big, positive for most FMCG stocks. But now I think the valuations, which were at some, what, 70, 80 times so for TTM, now and on average, if you look at most FMCG stocks, they're trading at 40 to 45 times maybe. And I think now at these valuations and over this corrective phase, one should look to aggressively add to them. I think going ahead with lower raw material inflation and growth coming back, these companies could be in very good stead. I don't think they're going to go back to 2025 kind of P multiples. But I think once that happens and the long-term trend obviously is favorable with urbanization and everything happening, nuclear families, I think FMCG consumption will keep going up and
Yeah.
the per capita income also going up. So you will be consuming better, higher price products. So the margins could also be better for most FMCG companies. So I think as a space, it's very attractive. Now at these valuations, it's a good bet. Last time, most probably, you're talking about a 10% correction where we gradually stagger our buying. Across the board, we would have seen anywhere between 5 to 10% kind of correction since the budget for most of FMCG stocks. And at these valuations, I think you should look at buying, even the front lines. My preferred choice would be Dabur. I think the mix of, some Ayurvedic kind of stuff, etc., and this and the normal routine products also a bit of health consciousness that makes it a better place for the new kind of consumption boom that we will see. And Honasa, obviously, I've said that's a
Yeah.
B2C, but that's a different thing. And other stocks, I think Jyoti Labs could be a good beneficiary out of this over a period of time. And normally, I think, yeah, across the board, most FMCG companies should do very well. Britannia is a no-brainer. So I
Yeah.
think Britannia, Lever, Daba, these stories could do very well.
Fair point. Well, all right. On that note, thank you so much, Mr. Awasi, for being with us on the show today and helping us navigate through various themes and at least helping us understand that better part of the correction could be over and we could actually see a sustainable move going forward. FIs also are likely to return with the momentum coming back as well. And that's the hope that we have. At least the retail investors, they've actually seen 5 months of pain. Time to get back onto the growth path, both on the economy as well as on the markets front. Thank you so much for being with us. Always appreciate your time. All right, viewers, we'll start wrapping up the market trade. 264 points higher, so 22,348 right now on the Nifty. We've had a brilliant day and we'll take it with both hands after those 10 days of excruciating, painful moments that we've been through in the markets. The Nifty Bank also 0.5% higher, but it's the benchmark that's taking it away. You can also see the small caps and the mid caps that have actually outperformed even the benchmarks. There's a near 3% uptick on the small caps today towards the end of the session and 2.5% uptick on the mid caps. Top moving sector is clearly the metals that have been shining the brightest with 4% moves. You have PSU banks coming back in flavor, 3% higher, continuing with their momentum of the last few days. You're also seeing autos in a faster lane, 2.5% up. You have realty that's on a solid footing. You can see a 2.2% uptick right now. IT, FMCG, pharma, all the three defensives are also up and about over 1% each. You know, the least amount of gains are in the banks and the financials and the private banks, about 0.5% for the Nifty Bank and the private banks today. India VIX down by 0.7% at 13.7. That's giving us comfort to continue with the rally. Of course, Adani Ports is the top mover on the Nifty today. 5% higher. You have Tata Steel, Adani Enterprises, Power Grid, M&M as those movers which are upwards of 4%. So even the large caps are actually moving with strong volumes and sharp gains in trade today. Let's also look at some of the losers. You only have 5 handful losers today. You have Bajaj Finance, Grasim, HDFC Bank, IndusInd Bank as some of those large caps that have not really contributed in trade today. But look at it, 45 stocks on the Nifty out of the 50 stocks end into the green. The PSU stocks in fact have come back pretty strongly as well. Concor, NMDC, Oil India, Steel Authority. You have upwards of 4.5% move on the higher side. Let's look at the F&O movers as well. Adani Green Energy up by about 11 odd percent. IFL Finance about 11% higher. That's the kind of strong move that you're seeing on the F&O space as well. Not just that, you know, of course Adani Group stocks are the ones that are moving in front, but you also have some of the others that have contributed. You have Coforge. Remember, there was this brokerage house report that came in the morning and that really pulled up the stock higher. It's almost ending 8.5% higher on the F&O action. But on the lower end, you do have some stocks that have ended on a weak note today. BSE, clear impact, although the impact has reduced towards the latter half of the day, but NSE shifting the expiry session to Monday. And therefore, some of the fear of volumes being taken away by the National Stock Exchange has been a key reason why BSE has fallen today. Bajaj Finance, Prestige Estates, Balkrishna Industries as some of the other losers. On the broadest index, let's look at the Nifty 500. You've had some tremendous names and gains today. You've had Aptech, Bharat Wires, you have Mukta Arts, InSwift Laboratories, you know, all of these, Huhtamaki India. Then you have ITDCs from the tourism space again that's been on the bus. Then you have IFL Finance as some of the big movers that you have seen double-digit gains in trade today. So fantastic day, bang in the middle of the week is what we've actually seen today. Let's hope that this continues and we don't have to see any more Trump tantrum towards the overnight session so that we can continue to hope that the rally sustains even tomorrow. We'll wind up at that. Do stay tuned with us on to Decisively Television as we continue to give you the coverage beyond the stock market hours as well. Stay tuned.
Good morning, ladies and gentlemen. Welcome to Top Stocks. In our market section, we will look at how stocks are performing early morning. And of course, this is a wonderful, wonderful day. The maturity of the Indian market at